Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. Yesterday was a very eventful day in the world of sports with a very interesting British Grand Prix. Carlos Sainz took his first win in Formula One for Ferrari after a very tight battle for the lead. In comparison, markets are expected to be much quieter today because it's the 4th of July and the Americans are celebrating their Independence Day. News and updates, however, don't stop. JK, good morning. Take us through the latest developments and narratives which you're observing in the markets.
Thank you, Swaraj. In fact, I'll be visiting one of the places where Independence Day celebrations will be, shown, and that is later in the evening. Yeah. So we start the evening. Sorry, we start the day's trading on a very quiet note, carrying on from the Friday's session, also where things were relatively quiet. Stock markets were down initially, but they rallied later, uh, following mostly the yield movement. The ISM data from US was very weak, and in fact, it was weak on almost all the counts: the employment side and the new order side, as well as the uh, inflation. Also, the prices paid side, all of them were weak. So that pulled down the yields quite a bit after they had gone up post Eurozone inflation, which was much higher than expected. So the EU session ended higher, but again, that was kind of thin market and not really representing no full market view. If you slightly step back and see, uh, the last 10 days, there have been several times when markets have reacted negatively to slowing economy. And there have been several days when they have reacted positively to a slowing economic data numbers. Actually, market is in a, I think, very undecided stage, whether the slowdown is so strong that you'd see a pause by the Fed, that is one side, then will probably help the market rally further. But if the slowdown is accompanied by a higher inflation and the Fed continues to hike towards 3+ neutral rate, then that is not a good situation for the markets. That's why markets are undecided. But yield, in that undecided state, market is somehow taking position in the bonds. That is why you are seeing a lower yields, well reflected in the big fall in tenors across, in particularly in the US. So direction, I would say that the market is still on a bearish side. Therefore, the rallies eventually will get sold until you get a sense of either inflation being substantially lower and Fed looking to bring down the targeted neutral rate, or you see the economy improving along with the inflation. So these are the conditions that is required for market. So as of now, both S&P 500 and Nasdaq, the major index which we follow as a bellwether, are the negative territory. On the currency side, uh, although conditions were good for euro to rally, US yields had dropped. Chances of ECB hiking rate in July are high, as well as one in September. But euro is not finding favors with the investors. That probably I pin it down to the fact that Europe, while they may have a rate increase at much faster pace also in the coming months, their economy will slow down much more substantially. And this is also because of the energy problems that they will be facing as we step into the winter this year. There's already a lot of gas rationing that has been happening in many countries in Europe, so which will be negative for their industrial production, etc. So euro is not going to get immediate favors from the market unless you see eurozone economy showing promise of good recovery. So far, nothing really reflected in the data. The data have been somewhat neutral. Inflation has been high. but market is trying to discount the difficult situation which the Europe is likely to get into in the coming days. On the commodity side, because there has been big slide in the commodities, so Australian dollar, Canadian dollar, all these growth related currencies have been down. Also because the economies themselves are showing problem that of so slowing growth in the coming months. Chinese one got slightly supported because their PMI suppressed to the upside, but overall dollar strength is actually keeping the dollar yuan well supported at 6.70. Gold once again tested the level below 1800, but held, and it is now trading around 1810. Nothing much to write home there. It is still trading in the same range between 1770 and 1870. On the rupee, of course, uh, market broke 79 levels, but came back very fast. Possibly some exporter selling coming there, and also some bit of selling by PSU banks. But notwithstanding that, rupee is not seeing any change of direction. It is again in a pause on the upside. Therefore, you will see a range movement for some more time, because oil is still holding above 110. The Brent oil is holding above 110. It's well supported, and the measures initiated by the government to hike duty on gold import is actually help the local gold prices to go up, but it is more intended to bring down the import content of our trade side. But again, the international prices of gold fell down, which might further negate the impact of the high prices of gold, and it may not have much of an effect on the import of gold by the Indian jewelry manufacturers. Therefore, this is something that we have to wait and see as to the effect of the same. Governments, of course, raised duty on export of petrol, diesel, etc., and these along with the custom duty increase, excess duty increase on gold, these are likely to make up somewhat the deficit that was raised because of the excess duty cut on petrol and diesel earlier in the month. That was done to bring down the domestic inflation. So there is some improvement in the fiscal deficit due to these measures, but definitely as far as the rupee is concerned, none of them have any direct impact. So gold import is unlikely to fall substantially unless there is a big rise in the gold prices in the international market also. So rupee will stay in the range for some more time between 78.80 and 79.20. Direction is still up, and unless we see flows coming, we are unlikely to see any major correction, or if any, intervention alone does not help for the rupee. Although we also feel that if the rupee is moving along with the dollar index and other currencies, then government and central bank might be comfortable with the gradual weakness in the rupee. But if they do intend to bring down the rupee due to imported inflation concerns, I think mere intervention will not help. There will have to be some policy measures, which may be a heftier hike in rate, or some measures to bring in some inflows into India, etc. So that's something that is nothing on the horizon. So we will see the dollar rupee gradually moving higher. For now, it will be in a range. Thank you.
Okay, thank you, JK. And I just want to repeat some of the narratives we are seeing right now. ISM data from the US came in weaker. We also saw yields across the curve drop lower. There has also been a fall in commodities, affecting commodity currencies like AUD. So even though markets are expected to be quiet today, as volumes increase from tomorrow, it will bring in volatility. So let's keep managing our risk. We'll see you all tomorrow with the latest developments. Thank you.